How to control your mind when trading. Well, if you listen to yesterday's or watched yesterday's episode, we talked about constant bet size. People don't get it. They think they need this kind of Zen Yoda Buddhism thing going on beforehand, and then they can come to trading. The big hint, the big secret to everything is that if you used constant bet sizing, you actually trained your mind to quiet itself down, which is a huge advantage because it's hard not to get hung up. Like if you get hung up on the dollar swings, right, you can very much destabilize yourself or get yourself off base. And that can cause you right now because the churning of your account has been delegated to you. You used to be able to do it at a wirehouse, but now they've delegated the execution to the end user, which I don't necessarily know is a good thing. There's a reason why they never publish what percent of their client base is actually succeeding. It's because they have to replace 2/3 of their client base every 5 months. I have friends on the inside, so I know what the numbers are. Remember, folks, features aren't benefits. Hotkeys, clicking your ticker symbol and then seeing it over multiple time frames, that doesn't mean anything if you don't know how to trade. And if it did matter and it's been in existence for 25 years, how come there aren't more people succeeding? Why is it there are only 5% of the folks actually doing this and making some money? So I would argue that having all that stuff actually works against you because you're a 19-1 favorite to fail. By controlling your mind, you control your behavior, right? Now, folks like to read Stoicism and talk about Stoicism, and I think it's good. Certainly very interesting, some of the career paths the folks who are writing about Stoicism, have done. Nonetheless, this is going to take years, though. You can't just read a book on Stoicism and have it affect you immediately. It certainly can resonate with you intellectually, but again, you're going to have to put it into practice and get used to doing it. And I guarantee you, you're still going to have very, very strong feeling when someone pushes your buttons. And that can happen when you're trading as well. You can get emotionally invested in the outcome of a big trade and all of a sudden get smashed. And you're like, wow, that wasn't supposed to happen. Everyone's so bullish. This is supposed to be a can't lose situation. I put all my money or too big of a bet size, and now I'm all over the place. And now you're angry. Now you're pissed. You're all over the place. So the best way to control your mind, again, is to start with a constant bet size and to say, like, your goal then is to get through the entire week, maybe the entire month, doing the same thing. That in and of itself is going to quiet your mind, the practice of doing that. Right? People say, oh, Mike, I can't sit, as an analogy, I can't sit, I can't meditate, I can't quiet your mind. Well, I don't think we're born knowing how to do that. Only a handful of people, maybe His Holiness the Dalai Lama is like 1 in 6 billion people. The point is that if you do it for 15 seconds, try it for 30 seconds, then try it for a minute. You don't have to go 0 to 100 all at once. And I don't know if it's people are too anxious or they don't have the patience because they don't like what they have to feel when they have to be patient and realize that it's life on life's terms, that their mind is already out of control before they even start to trade. They have no discipline. They have no mental discipline. And this is a game of mental discipline. The more you think about it, and if you've listened to this show, it's not about entries or exits. It does come down to position size for sure, because if you have too big of a position on, even a small move against you can hurt. And I always think about this, and this is shame on me for not saying it. If you can't make money trading the SPY, I don't think you have any business trading the E-minis or the MNQs. There's no point in trying to use leverage, even if the point size is 2. It just isn't. But people just make up their mind and they go, yeah, screw it. I'm just going to try it because it's only money. But to me, when I think about what gave me solace when I was trying to figure it out, it was that I could commit to a process and not worry about what it looked like today because I knew it was going to be ugly. And I remember, they say fake it till you make it. I remember going early in my career, going to work, dressed to the nines and putting on really good clothes and feeling like I was a phony because I didn't have any experience. I didn't even know the language that you would use to speak to other people about money. I had no idea what I was doing. And I certainly looked the part, right? Which when you hear other people say that, well, he looks the part, but you don't have anything to show for it. It's humiliating, right? I know that. I've been there. But the minute you start doing these crazy things is really the beginning of the failure or a long period of failure. I know that too. I practically invented it, I think. So, what eventually gave me solace in myself, despite all the noise, because don't forget, every quarter you're going to have a new wave of favorites out there, because the media needs something to sell. They need to keep your eyeballs focused on the screen or in the magazines. Why? Well, because they're in the advertisement business. They don't care what you do with your money. That's just incidental. It's just a hook to get you, to commit your attention so that you'll buy things from their advertisers, perhaps. You'll support the patronage. But that kept me, if there was one secret to what kept me going over the years when I was kind of collecting the data, which is really what you're doing for the first several years, you're panning for gold and saying, okay, where are the places where I can raise or find the best, spots, was that I was able to do the same thing over and over and over again until I could see the results. And then I would go to my spreadsheet and I'd put in the open, high, low, close, look at my position and say, okay, if this was a big move that went from, say, $20 to $32, what would I had to have lived through to feel my feelings in and around those ebbs and flows, those little pullbacks? You can call them a drawdown. Drawdowns are really not what happened on any one particular trade. Mind you, I think people are misusing the term. A drawdown is what happens between months of trading. So if you're up X amount of percent in a month, right, and you start losing money, that's not a drawdown until the month is over, at least in terms of building your track record. So you lost a few bucks on a couple of trades, even if it's 2 or 3 in a row. To me, it's not a drawdown until you book it at the end of the month. That's technically how it's done. I think people fall to pieces far too quickly about, losing. Again, control your mind. You put importance on things that don't really have to be that important. So you cause yourself all the duress that you have in your life because no one else is looking at it the same way. You need perspective. But again, like me, when you started, there was no one there to help give you that reassurance, to give you that perspective. Maybe you're getting some from this channel. Hopefully you are. But controlling your mind is the most important thing so that you don't act out of emotion. You don't act and go into revenge trading. You don't go on tilt. You don't say automatically because something that you're in is up $10 and you don't have enough, and then you come in at the end and start buying more without knowing how that strategy would have worked out ahead of time. You see, then you have no discipline. You can't be trusted with the loaded gun, so to speak. So how would anyone want to ever give you money? Because you have no mental control. And this is a business of knowing how to control yourself. It's too easy to put the trades on anymore. One of the reasons why I stuck with phone executions on the future side is because I had another human being on the other side of the phone who could say, like, what are you, crazy? Or what would happen frequently, it would be like, okay, I got your order. You want to buy 50 March sugar, this and that. But, next week is first notice. So you could get delivered against. And I'd be like, oh, damn, I forgot first notice. Let me think about the May case or something like that. And so I had to build that into my discipline. I had to build that into how to control, how to quiet my mind, how to not get caught up in the hype, how to say, like, I don't care who's on the TV. I don't care who's saying what. I don't care what big broker in the office is saying what, because they're all just talking shit at the end of the day. They have no skin in the game as to what happens with me. They already know what's in it for them, good for them, but they don't have any idea what's going on in my world, and I can't take their word for it. I have to do this on my own. So quieting your mind also means, in order to control your mind, I think you need to quiet your mind. And in that, I mean, you need to focus on one thing. And then everything that's outside of those parameters, anything that you stay in your lane. You think you don't have enough risk on? There's no trade there. How would you know it's a good time to add? Now, if you're in experiment mode and you're buying one contract and you're trying to know when to add a second, that's different because you know ahead of time that that's what you're trying to figure out. What you don't want to do is put in on a trade and then all of a sudden out of the blue start taking flyers. If you're in experiment mode, then stay with experiment mode, you see? And then this way, you don't end up falling into those bad habits, because once you build them, they're very, very hard to break. And there's no one there who's going to crack your knuckles if you just start taking flyers. The only thing that ever happens is that people get blasted, they lose a lot of money, then they're pissed or they're scared, then they can't come back to the market. It's not even like they blew up now, but they're head shy. And you don't want to put yourself in that spot, because you want to find yourself in a spot where you have total control of your mind, therefore total control of your behavior. And every day you can follow your same setup, so that when you see your setup, it doesn't matter what the ticker is, right? Because you're not going to be sitting there trading just one ticker, forcing trades. You can put your trade on, knowing that even if you lost on the last two, the fact that you were in consistent position sizing saved you, and you expect to lose from time to time. What you don't want to do is put on too big of a position, get destabilized, get knocked out, and then have your mind go crazy. Because then it puts you on the sideline when the very next trade that you see that you could put on could bring you back to break even or help you recoup some of that money that you've lost, but you've lost your nerve. It's one thing to lose your nerve. It's another thing to lose your confidence. But this is what it all ties into. You know, it's a very deep conversation. Some of you might be sitting here saying, what the hell is this episode about? But in many ways, this is really what trading is about. It's like, what do you do in between the time when you're not getting signals? You have to sit on your hands. You have to wait it out and wait for there to be one. Because unless you have a specific rule that says, here's the setup, there's no reason to put on a trade. Doesn't matter what anyone else is saying. Doesn't matter if you're someone you look up to is trading that. It might be appropriate for where they are. You see? Anyway, you like this video? Check out this one here.